Very good morning, everyone. Welcome to Admiral Markets. My name is Chris. We're going to take a look at this strategy webinar on the 21st of October today and dive into the details of strategy on the Forex market and take a look at maybe commodities and indexes. Before we do that, though, be aware that this webinar is intended for a global audience. It may not, it may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence and contact an appropriate entity to find out more information about that and other conditions and details. Also, be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer and that you are aware of the risk involved when trading. Once again, this webinar is hosted and organized by Admiral Markets. Take a look at the Supreme Edition, one of the great things that allowed, among other things, the Admiral Markets to win the MT4 UK Broker Award. A lot of good things there, 56 extra things that normally MT4 doesn't have. So definitely worth your time to take a look, as well as the analytics and a lot of good other things like education and promotions. Our focus today is going to be on strategy, and if you have a preference for any particular strategy that maybe you've seen in previous webinars, by all means take the opportunity to write that in the chat. And well, if you don't have any preference, then I'll get to choose. But if you do, no problem, just type in the message and I'll see which one is the most popular. All right, the calendar today is showing a lot of green events. One red event, which is the Bank of Canada interest rate decision. Personally, I don't trade that particular currency if it has a rate decision that day. Maybe that's a bit strict, but perhaps an hour or two after that, it's still perfectly fine. But in any case, you want to be careful with the CAD. Obviously, if it has an interest rate decision, should stay at 0.5% apparently. All right, got market heat map. We got UTX, a big mover, plus 4%. These are stocks, just in case you're wondering. IBM, big loser, 6% down. Google, 2.8. Still a lot of value there, 680. Quite a stock price. You can see here the top movers of yesterday, the top movers of the last 24 hours in the stock market. And then if we move lower, you will see the currency pairs, pound New Zealand, euro New Zealand, big ones, New Zealand CAD and pound odd, I think. No, it's pound CAD, sorry. New Zealand CAD, pound CAD. Well, as you can see, just looking at the heat map here, kind of a clustering, well, there's always a clustering around, of course, the baseline here, but there was not really any one pair except maybe New Zealand CAD that came close to moving 1% up or down. What is this one? Odd New Zealand. But a lot of them kind of hanging around the zero line, maybe more than usual, in fact. Well, anyhow, that's always interesting to take a look. And we can see that it definitely makes sense to take a look at Euro New Zealand and Pound New Zealand. Euro odd, pound odd, so we can take a look at those crosses. But first, let's kick off the webinar with looking at the euro dollar. I still don't see any preference, so I'll wait 10 more minutes, and otherwise I'll just choose one. Let's take a look just now at an analysis on the euro dollar. It did make that move up, as I was discussing yesterday, that probably there's a bit more space to the upside than to the downside. Did move up yesterday, almost hit 114, went about 12 pips shy, I think, of 114. And if we put a fib that I had yesterday on this particular downside, it kind of went up in between 38.2 and 50 fib and stalled and went back to support. Now, looking at the moving averages, you can see everything is quite intertwined and flat. So that does not give much information. If we add trend lines, I mean, it's a bit busy maybe, but we could add this support trend line here. We can add this resistance trend line here. for instance, like this, and we're still in a triangle. Now, from a wave perspective, this is an impulse, right? So that could be a wave A, for instance. This could be a wave B. Let me add that like this. And what follows after B is obviously, in many cases, the C. So that C could be definitely part of the game plan today. And I would say that this 1 hour top is important from that. We do have a resistance trend line there perhaps, but I would not say that that is ultra important. It could have a bit of a stall, pull back, and eventually get up to the 50 or the 61.8 fib before moving down again. So I still think that, like yesterday, the upside has still a bit more potential than maybe the downside. If it does reach the 50 or the 61.8 though, like yesterday again, those are still heavy resistance spots for more downside in my opinion. In that case, just to finish the story, it would be an A or analysis, B, C. This is probably a wave 1 or A. This would be finishing, that green C would be finishing a 2 or B, after which we would go down for 3 or C. Now, if that does not happen, what will be the alternative? Well, obviously, if this top breaks, this is not T, a 2 or B anymore. So that's an important level. If this bottom breaks, then probably 2 or B has already been finished. Typically, waves 2 have a deeper retracement. Waves B can turn at any of these 3 fibs. Waves 2 typically end up more around here. So whether it's a 2 or a B is unclear, but you can see that both of them have a high chance of ending at the 50 or the 61.8 fib, or perhaps going even deeper. So if it does break this bottom, then probably 2 or B has been completed at the blue circle. Now, that's from a wave perspective. From a moving average perspective, it's really not interesting because price is right on the moving averages. Moving averages are flat, so there's no momentum. And typically when price tries to move away from moving averages, when they are flat and on top of each other, it's going to be a choppy kind of price action connected to that. I mean, it's not easy for price to move away from those moving averages when they're glued together like that. And it's a lot easier to trade if the moving averages are having more distance from each other, either to trade away from the moving averages or even back to the moving averages. So from that point of view, you know, if this does break this trend line right now, I'm not interested in that too much, or maybe not at all, because of the fact that the moving averages are glued together. And this could easily break like this, and before you know it, it's right back and going sideways again like that. The chance of this happening, in my opinion, is too big for me to really be interested in a breakout to the downside on the euro dollar. It's a bit different with upside because I do think that there's a higher chance it can move up to the 50 or 61.8. But even an upside, it's actually the most interesting to still look for shorts at the resistance fibs, in my opinion. All right, this is the 4-hour chart. And I don't think I have much to add. No. Well, we can dive into very long analysis, but I don't think maybe that's that important at the moment. You know, from this point of view, if price does break this bottom, then there could be space down to 112.50 and probably 112, I would say. And it depends. If it really accelerates below that, then it is probably more leaning to a 1, 2, 3. If it stops at the minus 61.8 target, it's more likely that it's an A, B, C. So it depends how far and how deep it goes, I think, which one of these, blue or red scenarios is a bit more likely. Alrighty. So that was, I personally didn't trade the $0 upside, unfortunately, but it was okay. I think it didn't really, let me see how it went. Here we got the break, I think. A bit of a pull here, break, pull back down to 113.50. You can see, push up, down. That's kind of what the motion I was looking for, or at least explained in the webinar, ended up to that. So if you were following the $0, then maybe that was the trade for you right there. That's the one I was discussing. I traded myself the pound out, which unfortunately didn't really work out for me at all. And it was probably, in retrospect, probably a bit too choppy, I think. Yes, what I was looking for was a follow through, let me see, here to the downside, and that didn't happen. And maybe a bit too aggressive on that trade. I mean, if I look at the hourly chart, probably it was a bit too aggressive. Yes, there was a rising wedge that I saw. Let me make a blank chart here. Yes, there was a bit of a rising wedge, like that. Like this. And basically I was trading this break here and hook back, but it was still above the long-term moving average, as you can see. So you can see that 1 hour long-term moving average is sometimes, I think, not to be underestimated, and maybe I did that a bit. And price not breaking through that. So maybe it was a bit too early on that to break out there to the downside. I don't know, probably yes. So that trade didn't work out for me. That was a loss, unfortunately. And pound yen, I was talking about upside yesterday. And while that trade was okay-ish, it didn't go, I took it about here and I got out for a few pips profit. Maybe just really literally 2 or 3, I think. Nothing much, but it wasn't a loss. And well, we did get the bounce that I was looking for. We just didn't get any follow through at all. And it just has been going sideways. Now, recently, the last hour, as you can see, the last 2 hours, it's been actually falling at the moment. So what's going on with the pound yen at the moment? Well, let's take a look. Well, the 4 hour is kind of a mixed bag, in fact. The daily too, so it's not very lined up, to say the least. The weekly, a bit bearish in the sense that it's below the band. There's space down to the tunnel. 4 hours, that there's no alignment. I like to have 4 hour alignment, and 4 hours, not in a very impulsive mode at the moment. 1 hour, it's actually making a reversal back down. Yeah, so I would say that, okay, there is the potential maybe for a reversal trade here, like this, which means that, let's see, there's about 50 pips to the downside. So if it makes a slight hook back, perhaps here it could make a good fall. Let's take a look at the 15-minute chart. So let me use the tool that I was using yesterday once as well. That's the sequence level. Let's see how far it has fallen to the downside. One, two, three, fourth level. All right, so if it mean, preferably if it makes a move to the 5th, then hooks back to the 3rd, and then falls to the 6th, that could be an interesting trade from 3 down to 6. So let me take a look what that would mean in or on the 1 hour chart. Yeah. Well, it's kind of like the pound odd. Yeah, there is that potential for a short, but perhaps it's a bit on the early side. The difference with the pound odd is the fact that price is still pretty far from the tunnel, whereas the pound odd actually price was right at the tunnel. So actually, from that point of view, maybe the pound yen is better than pound odd yesterday. So yeah, maybe this is a potential trade, I would say. A reversal trade on the hourly to the downside. But there are some charts, definitely like the 4-hour important chart, the daily, that are totally a kind of a mixture of things. So maybe there's something better out there than the pound yen. Let's take a look at some other pairs. But anyhow, I wanted to look at the pound yen because I was discussing it yesterday. Some other pairs that I was discussing yesterday were New Zealand. That's the one I didn't trade actually, and I have to think a bit what I said about it. Here in New Zealand, I don't remember. There was something I was looking for. I think it was a break to the downside, if I remember correctly. I really don't remember. That's funny. I remember talking about it, that it was close to the daily tunnel, but that could still move a bit down because the hourly and 4-hour is in a downtrend. I remember saying that the 4-hour has divergence, but it could still maybe make one more move because the hourly doesn't have divergence. I think that's what it was. But you can see that 4-hour still trumps the 1-hour, I guess, because it did and it does at the moment is making an upside correction. On average, the rule for divergence is that if there is divergence 1 hour or higher, that it should go back to the tunnel. And well, that rule is working out at the moment. It seems like it is moving back to the tunnel at this moment. So it looks like there's a reversal trade on the 4-hour chart up to the tunnel at the moment. Let's put that tunnel right there on the 4-hour chart and look at the hourlies. There's some potential for trade on the 1-hour chart to capitalize on that 4-hour reversal trade. And yeah, maybe there is. H3, it broke H3. If it hooks back to H3, there could be a bounce back up to H5 and the 4-hour tunnel. So yes, if it hooks back anywhere, I would say to the pivot, this support, this top, H3, it's a wide zone, but yes, anywhere there, it could see a follow through to upside. Again, though, a reversal trade. So let's see if there's anything maybe that's with the trend at the moment. But Euro, New Zealand, pound yen, some reversal trade perhaps possible. Euro dollar, also some reversal trade to the upside, perhaps possible. Let's take a look at pound dollar. We'll take a look at Kiwi, definitely iron. Good morning, Caitlin, good to see you. And we'll take a look now at the pound USD. What's going on here with the cable? Cable is struggling at the resistance trend line. We talked about it already yesterday. Still struggling right there. In fact, and perhaps slowly but surely breaking this triangle now to the downside. Let me put a different template on 1 second. Well, From a 4-hour perspective, here too, there's a reversal potential back to the tunnel. It could break below it and just fall and continue to fall. There is a support trend line still here as well. So those will be two levels to think about. If those two levels break, there's even more downside potential. But here too, again, a reversal trade. Let's see the 50-minute chart. And let me put here the 1-hour targets. Oh, all right, there we are. So you can see at the moment we're just at level 2. Level 3 is here, level 4. As I said, the best trades typically are between 3, 4, 4, and 5. So really before the downside gets interesting is 153.60 down to 152.75. So yeah, it's not really, again, not really something that I think is very interesting right now, right here at this particular moment for the pound. I don't know. It's actually perhaps even a bouncing spot to the upside still. If anything. You can see that, the space between 3 and 4, that is a good space. The space between 4 and 5, there's confluence, as you can see, between the tunnel and level 3, the trend line and level 4, the bottom and level 5. Let me put the numbers here like this. What are the best spaces? Where I have those red circles and red arrows. And from that point of view, level 2, level 3, if anything, are perhaps still a bit of a potential mini bounce spots to the upside. Now, so from that point of view, perhaps pound USD here at right now might be a better upside potential, yet also considering the resistance level like this so close by, maybe not very appealing, but pound doesn't seem that attractive. Let's see if there's something else. Dollar yen. Struggling with the 120, as we said yesterday, that there's not much space to the upside. And as far as I can see, yeah, it stopped at 120.05, 06. And still not interesting, in fact, so let me just skip it. In my opinion, not interesting. AUD/USD is breaking this triangle, in fact, to the downside, so that could be an interesting one. Showing weakness with this triangle break to the downside. So this is something maybe that's worth taking a look at. Let's take a look at the moving averages and see what's it all about. Got still some space left, and we put a 50 or fib here. See what the fib says. Those are the two levels to think about. Roughly in that zone, price should stop. Not much space left, and perhaps it will get into that zone already before we are aware of it. This happened 2 hours ago, and well, the trend line break, okay, moving from a trend line perspective perhaps, but from a moving average perspective here as well, very aligned, very on top of each other and sideways, not that great. Let's see if a pullback would make sense for more downside. Probably yes. This is 1, 2, 3, down at 4. Here's 5. There's 6. So might not get to 6, but if it hooks back to 3 or 2, could be an interesting short on this AUD/USD down to 5. So yeah, that's something on my watch list. Now, I think personally the best trades using these moving averages are when, for instance, the 4-hour is aligned and has moving averages where there's, for instance, here space between the 21 and the 144. So in this case, there is space. 21 is above 144. So it's bullishly, there's a bullish space, let's say, but price is in between it. So, the best is when price on a 4-hour chart, you have price here, you have the 21 band here, and you have the tunnel here, right? And everything is aligned and follow through to the upside. But because we are looking at a 4-hour chart and we're looking at the charts right now, does not necessarily have to be that this condition is visible on our chart right now. In fact, many charts so far, we haven't seen that at all. So, but preferably I like to see this. Those are the most interesting zones. Something, for instance, like here, when price here was aligned. And I did take the USD long in that zone from here, where I have the green circle, last week, and that was actually a nice win of 120. Everything is aligned. You can see it's a good example where those green vertical lines, right? Price above it, above the band, band above the tunnel. Nice. Now we don't have it. On the odd USD, not. Euro New Zealand, I didn't see it. Pound yen doesn't have it. Euro dollar doesn't have it. Pound dollar doesn't have it. It's not there. Doesn't mean that there's not necessarily any trade to be discussed, but it's reversal trades. It's like the pound odd yesterday. Trying to find trades between the moving averages, and you can see that the pound odd like that failed, as it's there's more. It's a bit more difficult to find a good trade because it's the market is not as aligned, let's say, I think. So yes, there is a short here, but it is definitely closing this space reversal type of trade, closing the space between the band and the tunnel. Same thing for the Kiwi here. But there's one advantage, there's a bit more space to the downside. So the Kiwi might be a bit better to short this reversal. Yeah, Kiwi is reaching the third. If it pokes a bit, if it has a candle close below 67 on the hourly chart, finally we're at the Kiwi. Sorry about that, Aaron, that it took so long. I would think that's a break of this third level, which means we have space down to the fourth level, which is at 66.10, as you can see, the fourth purple level counted from the pink. And in my opinion, what I think would be interesting is if price closes below the third level with an hourly, and then I would like to see a pullback up to the 8 EMA or the band, and I would like to take shorts from there down to that fourth level. So that probably seems, I would say, to be the most interesting setup at the moment when comparing at least these 7 or so that we've looked so far. But there's still, a couple of things that need to happen. But it doesn't seem that far away. This could easily happen today. And in that case, when price does move from 3 to 4, it's closing basically the space between the band and going back to the tunnel on the 4-hour chart, and which is what we would expect because there is 4-hour divergence between these tops right here. And the rule is that if there is divergence, price should go back to the tunnel. So in this case, indeed, the fourth level matching nicely with the tunnel in this case. So it would be a 4-hour reversal trade. It would be actually already on the 1-hour chart, one can consider as it breaks the third level, and the moving averages in that case are already aligned to the downside. So It's a big difference with the pound out. I was looking yesterday, their price was still above it, and I was shorting against the tunnel. In fact, here it would be already aligned to the downside, and I would be trading with the trend on the hourly. So there's a good difference there. All right, dollar CAD. Well, it looks like we're trying to make a bullish reversal here. Yesterday, not able to break through support. In fact, price staying above the tunnel and now breaking above the band. So yes, it looks from that point of view that we had not only a break above the band, but we're using the band now as support. Whereas here, yes, price broke above the band, but stayed in the band and actually, didn't use it as support. Now, how can you notice the difference? The difference is that there was no gap between band and price here. There was here. One difference. Two, band was flat and orange here. Here it stayed slightly green. And third, of course, very importantly, is that it is trying to break above here. Again, above the band. Here, it never did. You can see the difference of the position of the band. It's above the tunnel. Here it's below it. So yeah, it does look like there's a potential now to fill this gap with the tunnel as a target and to fill the gap like that. So from my perspective, yeah, it's even potential to go long right now. Alternatively, let's see, 1, 2, 3, 4, 5, 6. This is the 7th candle. That's the only thing a bit disturbing about it. But can't have everything aligned. Well, I think from a 15-minute, I think it's okay that this it's 4-hour, the 7th candle on the 4-hour chart. So from that point of view, I mean, it's still being, let me say it this way, it's okay, but I would like to see, probably I would rather trade it on a smaller time frame so that I'm not, 4-hour chart could be a bit maybe too high of a time frame for this, I think. That's also a reversal trade, and then it's better to be a bit traded on a lower time frame so you're not kind of stuck in that trade for too long. So on a 15-minute chart, it's breaking through H3. So any pullback here, we use a different template here. Yeah, any pullback looks good. I think a pullback down to 130, 129.90 is a good area for longs. And I think makes sense for upside. So dollar CAD upside from 130, I think makes sense. And targets would be 130.75. Yeah, but we have the CAD interest rate, so forgot about that. So forget that. For at least from my opinion, that's not worth it because the interest rate could mean that price doesn't go anywhere on the CAD, goes into retirement mode, goes flat, then the interest rate happens and press conference and it makes some wacky up and down. So I'm not going to take that risk. I forgot about it, so it was probably not even worth analyzing. Sorry about that. So I forget this idea because of the interest rate. So, but without the interest rate, that's what I would indeed be looking for. Still, therefore, Kiwi looking like the best one at the moment, Kiwi dollar. So, anyhow, anything else? Let's take a look at your pound, still a bunch of mess. Euro yen. Well, daily not very appealing, is it? With a triangle like this. still the same as yesterday. 20, nothing really changed that much. Made a bit of a bounce to the upside. Not that appealing to me. Pound yen, we talked about it already. Maybe the reversal on the hourly. All right, pound odd is certainly not falling and is moving up at the moment. Let's take a look. I don't like the 4-hour chart that much for upside. I would still be on the sidelines with this one. Let me take a look at Euro odd. All these 4-hour charts are really not that great, folks. It's not a dreamland of trends at the moment. That's absolutely not the case. Euro New Zealand is reversing, talked about it already actually. A pullback could be good for support for more upside. Both Euro New Zealand and Kiwi looking interesting, I think. Yeah, pound is doing the same thing probably. Also trying to make a reversal on the 4-hour. Well, which one's better? Euro New Zealand or pound New Zealand? Let's take a look at Euro pound again. And there's absolutely no difference at the moment. The moving averages are flat, so nope. Difficult to see any particular favorite when looking at the euro pound at the moment. Probably both are just equally likely then in that case, but yeah. So maybe we could take a look at no. So yeah, pound New Zealand, euro New Zealand dollar. I guess New Zealand weakness maybe would be the one to focus on today. Looking at this so far, anything your yen doesn't look that interesting at all. Pound yen maybe. Your odd and pound odd don't look interesting to me. Odd USD, yes, a bit, but New Zealand's still a bit better. Dollar yen, not at all. Euro dollar, maybe a bit. For a small upside, then downside, yes. Pound USD, only below 153.60, really. Or from higher, from 155.40 downside, I think it was. Yeah. So this is doing some analysis with a bit of waves at the beginning and moving averages and Fibonacci sequence level and some trend lines on majors and some crosses there. Maybe we can take a look at DAX. Let's take a look. And gold, silver maybe. Well, yesterday was a small nothing day. Doji still fighting against this resistance top. Nothing really going on that much there, but if it does break, at the moment it's looking like an ascending wedge. So if anything, I would be more bullish upon the break, or maybe even now before the break happens. Let's see. Yeah, if it gets back to this bottom, it might be a good bouncing spot. Tunnel, support, ascending wedge. All right, gold. Well, this looks like a bull flag. Break above this trend line, I think, is a good breakout, decent breakout trade. Silver is still at resistance. Didn't like it too much. Does not look much like a bull flag. It more looks like it has divergence here. Well, I am not that interesting in silver at the moment. If anything, it looks like it's trying to make a breakout to the downside and a reversal attempt. So the only thing I can really think that might make sense is if it breaks, pulls back, and that makes the follow through. Let's take a look at dollar CAD. We got a question if it's an inverse head and shoulders. On the 4-hour chart. And I think that what you're looking at is probably this as the left shoulder, this is the head, and maybe you're expecting another shoulder here in the future, or you consider this already one. And yeah, that does make sense. I think we're actually probably, I mean, looking at this, I would say that it's probably going to move up to the tunnel, but with the news event, with the interest rate, difficult to say. It could do anything at once, depending on the press conference and stuff. But yeah, the potential is there, definitely. It already or has occurred or could occur still. Yep, there's definitely a strong divergence between these bottoms. And when there's strong divergence, the tunnel is the first target, minimum target. Before that divergence is eliminated, and it's getting there. Probably it will get there. There's a good chance, I would say, from a technical point of view, but we have a news event, as I already said, so it's difficult to say. You can see that there was divergence between these daily tops as well here, right? And once again, same target. Tunnel is the target, and if it gets that close, I would say this is considered target taken out. If you're really on a daily chart, it's within like 30, 50 pips. And well, maybe this was about 55, but it's probably still close enough for me to consider that divergence on the daily chart, the bearish divergence here, to be, I would say, out of the way. I might still fall to the tunnel, but at the moment I would consider that divergence not necessarily a factor here on the daily. All right. So yeah, divergence is very important, very good to keep an eye on it, and very useful factor when looking for reversal trades, when trying to trade back to the moving averages, understanding when that has a better chance of succeeding and when not. So yeah, very useful. Absolutely. All right, let me take maybe a look at one or two exotics. Do you have any preferences? Anyone see a pair and think, wow, this is really great pair today. I'm going to trade or analyze this one. Does anyone have a preference? To me, the market does seem a bit choppy, does seem a bit sleepy. I don't know why. Maybe it's coincidence, maybe because of the interest rate next week. Swiss yen, interesting. There is a alignment here. Let me restart this quickly. 1 second. In the meantime, tonight, Nana is going to take a look at the Asian session, by the way, and which pairs to trade, correlation as well. And tomorrow, we're going to take a look together at market cycles. So I hope to see you then. I think it's going to be a fun webinar. So I hope you can join. But obviously, there is a recording as well. Hopefully, it will be available if we do it properly. But if you can make it live, it will be great. Going to take a look at market cycles. I think it's going to be a fun webinar. Next week, we've got the same schedule. And we'll take a look at moving averages. Then let's take a look at price action trading school, chart patterns this time. And next week, we take a look at the differences in broker approaches and or methods or liquidity kind of offerings. How do you say it? Like ECN, for instance, and regulations. Anyhow, back to the charts. Let's see if it's, there it is. That's the wrong template. There we are. We're back. So I was about to look at the 4-hour chart, I think Swiss yen. You see, all of them are reversing. All of them are above, or so many are above the band going back to the tunnel. Amazing. One of the few is that doesn't do that is the Swiss yen. All right, let's take a look at these hourlies. 4 hours definitely aligned to the upside. Let me take a look how far it has gone on the 1 hour chart. Only level 2, okay. Let me see how far it went on the 4 hour chart. Level 3, okay, a bit above level 3. All right, so we know best zone above 3 to 4. So yeah, that could be a good trade actually to the upside. Swiss yen, bit of an exotic, but yeah, if this candle, this hourly candle closes bullish, anything like it is now, engulfing twins, break above this fractal, break above the band again, band aligned, break above the third level, 4 hour chart upside. That seems to me like a trending trade. I think with this, I think a stop loss, just a simple stop loss below this bottom should be enough. And targets probably at level 4 and at level 5. Yep, I think that this is aligned. I think that's a good setup. probably the better one with the Kiwi. So other, let's say, exotics are not really, it's kind of the same thing. They're all intertwined. The moving averages are flat, or there's prices going back, into the moving averages. So no, there's not really a lot of alignment there. The volatility reading, the volatility map is as follows. Basically, what you're looking at is this left bar here, right, is the zero moment, is like low volatility basically. And the further you get from it is higher volatility. Volatility increases. Okay. The percentage here to the upside, in the middle you see here the zero level, right? And that means basically that price has, compared to yesterday or compared to earlier today, has moved in one direction or not. If it's 0%, it basically closed as roughly as where it opened. So if it is closer to 1 or above 1%, it made a lot of movement to the upside, that pair. If it goes down, it made a lot of movement to the downside. So what it shows is, did the pair have a lot of volatility and did it move a lot? If it's all the way here, it had a lot of volatility, right? Because it's all the way up, down, all the way to the right side. But it's at zero, so it means that there was a lot of volatility, but it just ended up at the same level. So it could have really moved up a lot, the pair like this, but then it ended up the same. That's what this would mean. Whereas if it's somewhere here, it had less volatility, but it moved to the upside very, very strongly. Compare that to a pair maybe that is somewhere in here, let's say below the zero. That means that there was even less volatility compared to green, and there was a slight downside movement. Does that make sense? So with this, we know now that the pound New Zealand was the biggest volatility pair, but the biggest mover, like bearish or bullish, was the New Zealand CAD. It moved down the most, in fact. The biggest upside mover was this AUD New Zealand. Second was probably Euro New Zealand and CAD yen. The least volatility, the most on the left, was this Euro pound. So does that make sense, Eugene? Okay, great. So let's take a look at the majors again, and some time has passed. So my to-do list, my short list or checklist seems to include Swiss yen at the moment, Kiwi, Euro New Zealand, Pound New Zealand, I guess, as well. The New Zealanders basically against the majors. So what's happening with the euro dollar? Let's take a look. Seems to indeed get the bounce. And looks like it's about to push above these fractals. And that, I think, indeed, probably the signal that we're going to make this ABC, as expected earlier this morning here in the webinar, but also, if you're curious about waves, here in the wave analysis section where I had here already an ABC posted. And the break of this could be the signal for long. If it goes too far, this candle might probably be better to wait for a small pullback. But there's not a lot of space until we run into a resistance level. That has to be very clear as well. So pound USD. Yeah, nothing much changed. We got a bit of a smaller pin bar, perhaps, but a bit of a wick at this tunnel. So, as I said, it's not that great of a shorting area still as yet, but there could be more of a bouncing spot area. But for me to really be interested in upside, I would probably have to see at least price break above this local resistance and tunnel probably. So no, still in a no kind of trading zone. AUD breaking to the downside, needs to hook back though, at least to this, but still keeping more interesting. All right, I'm going to take a short break. We'll be back in 2 minutes. If you have any questions or pairs you want to take a look at, please write that down in the chat, and I'll be back in 60, 90 seconds. All right, folks, I'm back. Thanks for that. Yeah, we're still on. I just had to, nature called and had to take a quick break. Let's see. Malcolm is asking about the New Zealand setups. Definitely we can take a look at that. Basically what I'm looking for on the Kiwi, which is the New Zealand US dollar, what I would be looking for is a break, close, candle close actually, below 67 on the hourly chart. After which I would be looking for a pullback to the 8 EMA, which is now at 67.25-ish. Those two things I'm looking for to happen. Then either take a market order or pending order. Depends how good of a setup I think it is. Well, this is a reversal setup, so maybe market orders would be better. But it's I think a decent setup, so even a pending could make sense. Stop loss, well, I would go above this top here, this fractal, and the tunnel. So I would probably put it about 67, I don't know, 70-ish, which would be about a 45 pip stop loss. Target at this moment is, let's check, let me take a look. Let me put on the fib levels. 1 second, folks. Back at the fib levels here. Target 66.10. Let me put on fib, these fib levels. This. Yeah, 66.10 makes sense. Now, what happens if it doesn't put a candle close below 67 and bounces right now? In that case, if it bounces here, right, and doesn't close below 67 with an hourly close, I would not look for a short at the 8 EMA, but perhaps still look for a short at the 38.2 fib, 67.50, which is this supply demand zone here, as you can see, and a fib and a tunnel. And that could still be a good zone, but I probably wouldn't go for a pending order. I probably would keep an eye on the market order. Alternatively, still the 50 and even the 61.8 fib, or if any of these fibs still are actually, I think, potential turning spots, in fact. So that's the difference, depending on what it does now. Does it put a candle close below 67? If yes, 8 EMA. If not, 38.2 fib, probably, but any of these fibs, in fact, I would wait to see which one, how far price can go up. 38.2 though seems very good because of the confluence. Stop loss, if it breaks below 67, I would put it at 67, 70-ish. If it doesn't and it hits this fib, I would probably tend to put the stop loss maybe a bit more spaciously, 67.90, 60, 68.03, probably anywhere about 40-50 pips, I guess. Well, technically, if it goes to the 38.2 fib, it should be all the way up here, but if there is some turnaround, then I think a tighter one does make sense. Target's still the same though, 66.10. The advantage of the Swiss yen compared to the Kiwi, I think, is still that Swiss yen has everything aligned in a trending formation. Kiwi doesn't, but I think this one still has a lot of good points. I think there's a lot of, things that make sense on this. So I think it's worth trading. Is it perfect? No. I mean, Swiss yen does look perfect, but doesn't mean that perfect necessarily is always a win, nor that imperfect is not a win. So it depends. Obviously, market is the market. We never know. Euro New Zealand, in my opinion, is a tad less interesting than the Kiwi. Got the same kind of potential here to go back to this resistance spot. And therefore, a pullback here. Let's see. There's divergence between these 15-minute tops. So pullback down to the 15-minute tunnel. Anywhere in here, I was saying, right? Should be a bouncing spot. Let me put on the sequence level. 1 second. One, two, three, four, five. Yeah, we hit the fifth now. So from that point of view, when you hit the fifth, you should definitely look for a pullback to be ready for a pullback to 4. So that makes sense. And then up to 6 roughly. So I would wait for a pullback to those maroon kind of browny trend lines there. Let's see, fire brick actually it's called. All right, let's see. 8 EMA is relatively new. Well, yes and no. It was actually something I used in the past, 5 years ago or something like that. 4 years ago, even probably, I don't know exactly when. I eventually removed it because just to make maybe the charts a bit simpler. And recently been using it a bit more again, indeed. And especially useful, I think, if there's kind of a breakout situation and where price is really going in a good momentum, is pulling away or filling, let's say, the space between a 3 and a 4 or a 4 and a 5, and I just want a tiny pullback to get in. That's why I started using it again for those specific situations. So it depends. In this case, for this particular chart, I don't think it's even very important. You could easily remove it. I think it's not really for the Kiwi, I would say, yeah, it is interesting to have on it if it breaks below the third. So it's for that specific situation. It's always still useful. It does give some information about, for instance, here when it pulls away from the band, or if it goes here, again, if it gets dragged back into the band. There are a lot of pieces of information you can gather from various moving averages and how price relates to it, and etc. Well, folks, I don't want to burn your time here unneededly. Is there anything you would like to discuss? Anything you want to ask me maybe about the sequence levels, moving averages, I don't know. Anything you have in mind? At this moment, my kind of material that I have in mind, or the markets, I think I have nothing to add. And I'm not sure, it's up to you. If you see anything you would like to talk about, let me know. Otherwise, I guess we can wrap it up for today. The color moving averages are actually, it's just an indicator, so it does that automatically. And I can send that to you, definitely no problem. Send me an email and I'll send that to you. Here you go. So Eugene, if you send me an email to that email address that I just mentioned there, then with a quick email, topic, please send moving average indicator, and it's on its way. Any other questions? Risk reward indicator, no, don't have that. Always something I do manually. Could use boxes, I guess. Let's see. Box like this, maybe. Oh, something like, come on. And then there. Something like this. This is potential reward. I guess something like that you could use. And then this, the risk takes a bit of time, maybe. Let's see. Fractals, yes. Fractals, I think, are just good for seeing support and resistance. Sometimes for breakout trades, I use them. So for those, I think for those two reasons, really. It's also good for trend definition. I mean, if the fractals, the relationship of fractals to the moving averages is also interesting, in the sense that if you have fractals that are, in above it here and in it, in the moving averages like this, the band, strong trend. But once you got fractals here, these fractals are still very important because once those fractals break, then we got clear fractals below the band here. You see, and then we're starting to have resistance fractals actually in the band. Even looking at the fractals in relationship to that band gives us some information about how strong that trend is. It can be used for entries, identifying breakout levels easily. How do you identify daily tunnels and channels? Well, daily tunnels is really the same thing as any other tunnel. It's the same moving averages. So maybe you went to the question a bit differently, I don't know, but this is the tunnel on the daily chart, the purple lines. Channels, you want to connect tops and bottoms. So how do you identify it? Well, that's quite a long topic to really go into depth. I mean, that easily would be a whole webinar of an hour. But I mean, ultimately, you're connecting tops and bottoms at a certain angle. If it's a trend angle, a trend channel, at about a 25-ish, 40-degree angle. And how do you identify it? Well, you want to basically connect these tops and bottoms and see if those trend lines connect and what kind of angle there is. And in this case, you're going to have a bearish channel. That sounds interesting, Malcolm. I would not know exactly what he's doing. I've never heard of that. But yeah, if you know more about that, definitely all ears. Very curious how that trader does that. Wouldn't know now at the moment, what that represents, but it sounds interesting. 8 EMA, no, I don't know you would always use it. It's something like, as most actually, pieces of indicators, is that it's occasionally used when I think it's providing interesting information. Some things maybe are always used, but most of the time, kind of pick and gather the pieces that seem the most interesting at that point. One of the things that maybe are always useful is the oscillator, right? Because it's always good to check if there's divergence, what the oscillator is saying, is there momentum. All right, so good questions there. How's the trading going for this month? Is everyone having a decent month, or is it struggling so far in October? Swiss yen looks pretty close. I think that's it. Yeah, that's indeed the candle close there. And that looks like a good long to me. So that's it right there. And I guess we'll see how it goes today. Find out more later today, maybe tomorrow. Kiwi probably didn't have that candle close. Well, it could happen this hour. Let's see. It's a bullish candle, so not sure if it will. Otherwise, maybe that retracement could happen instead of the close below 67. So that's still on hold, and I'll be monitoring this one. think next week, Wednesday, is the interest rate. That's the 28th, 1 week from now. All right. Well, let's see. It looks like I think the Kiwi will make probably a bullish rebound. I don't know. It's still early, but yeah, there is a bullish candle. I don't know. Time will tell, and I hope to see you in tomorrow's webinar. We're going to take a look. Nennet and I myself, we're going to take a look at market cycles. So if you want to join us, go to webinars at Admiral Markets right here. As you probably know already, but still, for those maybe looking at the recording later on, here you can take a look at market cycles right there. Register online by clicking on this blue button. You can go and register by going to education and clicking on webinars. First go to admiralmarkets.com and then follow those steps. So I hope you see you at the webinar, and maybe tonight with Nennet already as well, looking at the agent session, and wish you good trading. See you soon. Cheers.